there, welcome once again to the Dukascopy TV studio here in Geneva. I'm Ben Jones. Back alongside me for a market overview is Bruno Estier. Bruno, once again, thank you very much for joining us.
Good morning, Ben.
So, 2 weeks ago you were worried about the stock market, so what's happened since then?
Yeah, we were worried because we were at the top around 2000, and we thought being at the top was not a very good sign. There was a few things going on. Since we had two major moves going on. The first one we see here on the US 10-year yield, which rose from 230 to 250, well in advance of the announcement yesterday that eventually the Fed could be tightening a little bit earlier. And the second move we see on the dollar index, which is represented here inversely with the yen weakness against the dollar, which is basically this dollar strength and yen weakness, which is usually leading to an appreciation of the Nikkei. And the second worrying sign was the fact that the Nikkei was not really moving upwards very well. That was an odd thing, indeed.
Okay, and were there other signs in the market?
Well, there was something in one individual market, that was Brazil. Brazil already in September 4, we were breaking this steep uptrend with a big move on Monday. And the second information is that you need, when you look at different markets, you need to look at individual markets, because on the emerging markets, which is a global index of BRIC indexes, you really did not have information before yesterday night. So here is an information that you need to look at individual markets to get some hints. From that global picture now, from the emerging market, we notice that we can retest now the area of the low of August along a bearish divergence. And for other markets, we have in the US something very specific. Last week, the Nasdaq made, we see here, a big black candle here, okay, which was a reversal day. And that was well in advance of what happened 5 days later. That reversal day was followed by some narrow trading range, and that was also 5 days before the announcement on Apple. So looking at charts is really important.
Okay, did we finally get a correction yesterday?
Well, we started the correction because if we look carefully here, we had this volatility in the past week, but it broke the 1990 levels only on a closing basis yesterday. And that opens a move down all the way to 1944, which is the cloud, which is usually an area of support. Now, we need to notice that momentum on the way down is turning down and has been moving down already on the Stow, but it's going to be joined by the MACD, which is a more longer-term measure. And we need to be relatively careful. The bulls need to be careful. Maybe you remember that we discussed about the VIX in the past, and we said that level around 11%, where we were 2 weeks ago, around 50%, were too low levels, which usually precede big rise in fear, big rise in the VIX index. And indeed, in the last 2 weeks, there was a rebound on the dotted line. And the key question is to figure out if we are going to take this previous high that we had in August at 17.5%. If we do, that means that the fear is going to be much higher than so far in the past months. And that could induce a correction, which is the one that we have been expecting, a 10 to 20% correction on the S&P, corresponding to the 4-year cycle. In that case, I think we need to realize that even though the Euro stocks market, which had been rising on a relative strength basis versus the S&P, is going to be held in a trading range and not going to be able to move to new highs alone. That's what we are going to see for the next 2 weeks.
Fantastic. Bruno, once again, thank you very much for joining us.
You're welcome.
And thank you for watching. Do make sure you keep clicking back to Dukascopy TV, as we'll be bringing you plenty more updates and exclusive interviews. Bye for now. Bye.